So, you want to learn how to avoid taxes.
It's almost April 18th, and you know what that means? Tax season, baby! And you know what that means? You pay your taxes, or else you're going to jail. So, with this, here's how you're going to learn how to pay less taxes. Hopefully. And if not, then you go to jail.
Now, it's going to be very simple. The first step is you don't do them. That's right. If you don't do your taxes, you can't be taxed. Simple. Now, there's this pesky little thing called the IRS that's going to want to take your money. Just don't let them. It's pretty simple, you know? Don't let the IRS take your money. And don't give them a single dime. Because if you do, you're letting the government win. And we don't want that here. Now, in case you are required to pay taxes, here's how you get away with paying the least amount of taxes possible. Now, the first one is a very one close dear to my heart. File your college expenses. Now, what do I mean by this? Paying your college, it can be very, very expensive. And people know this. So, there are many ways to get around paying more taxes than you need to, like paying for college. Paying for college means you can get tax credits that can go towards lowering the amount of taxes you have to pay. So, let's say you pay for tuition, or you have children that pay for tuition, but you give them money. Now, you are labeling them as independents, and that means you can actually use them to lower your own taxes. Because you know what? They're broke college students. They're not going to make money. So it's fine. They're not going to make money anyways. So use them to lower your own taxes. Okay? File them as dependents and use that sweet tax loopholes to make your bank. Now, the third option is using your medical reliefs. You have a broken leg, break it again, and get your receipts back. Alright? Because medicine is expensive. And if you don't have insurance, all the better. Alright? Break your legs, save your receipts, and send them with you when you're going to go do your taxes. As long as you bring your receipts and show that you paid for a broken leg, you'll be fine. Okay? That's going to lower your taxes because they're not going to consider that. And if they do, well, you should break another leg. Now, the fourth option here is going to be one of my favorites. Have a cash-based business. Allow me to explain. Having business means you make money. And when you have money, the government wants your money. That's where the IRS comes in. They're going to want your money and they're going to want to know how much you made. Now, there are several ways to do this. Because when you have money, we have this. I messed up. Hold on. Here we go. She. Alrighty then. Now, when you make money in a business, the IRS is going to want to know how much you make. And that's where this comes in. The T-chart. Now, on one side you're going to have your assets, and then on the other side you're going to have your liabilities. I don't know if this... Yep, so A is for assets, and L is for liabilities. And you know, when you want to pay as less money as possible, liabilities are a good thing. And why do we file our taxes? So we don't go to jail. Simple. And people like to use this to keep everything in balance. So, let's say you have a business and you make $500 in service revenue, because that's how much you're going to make. Now, this right here, this $500 is going to be your cash. Now, we need to keep everything in balance. So we need to put $500 here, and not liabilities. However, in both liabilities, there is also your owner's equity. And that's how much the owner is going to have. So we need to keep everything here in balance. And of course, when you have your money and no liabilities, the government's going to see this and say, I want your money, a percentage of your money. So what do? We lose money. Exactly. Now stay with me here. When you make money, you gotta spend your money. Now, whether that means hiring employees to lose money or purchasing equipment. Let's say I run a restaurant and I make burgers. Now I need to spend money on burgers. So what does that mean? I need to spend money on expenses. So when I spend money on expenses, I am actually losing cash. So I spent $100 on burgers. So now I lost $100. So now I only have $400. Now, look over here. Suddenly I have less money, but I also have inventory for burgers. Funny how that works, huh? Now, of course, this does not make us equal. So what do we have to do? We still have to change these things. Now what do we have to do? We have to adjust this, of course, because while we have this and this in cash, we have less here in owner's equity. So we got to do a bunch of accounting mumbo jumbo, and that's what they do. We got to adjust it and make it look like we have less here and more here. So that way, the government sees this, they see how much we make, and they say, oh, he only made this amount of money this year. We'll only tax him so much, or maybe we won't tax him at all. And of course, when the IRS gets very suspicious about things, they're going to take a look at your finances. Anyone who's ever seen Breaking Bad is going to know that you mess with your accounting books, the IRS will come for you. And not everyone's Skylar White, yo, alright? They're not going to believe your accounting stories, and they will fine you, and you will go to jail. Now, and you know how they got him? You know what they did? They looked at the books. They audited him, and they looked at where his money came from, and how they found it. Now, how did they find it? They looked on his online orders. They looked on his online orders. Yeah, that's what they did. And so they found money. They found his money on online orders from his businesses. And they found how much service revenue he was getting from his business. But when doing his little accounting books, he had less money coming in than the service revenue said. So that's why the IRS decided to bring him in and have a little chit chat with him. So, how do we get around this pesky IRS looking for my money issue? Simple answer, don't make money. Or, do make money. However, do it on a cash basis. You know why business, that's not the main reason, but a lot of reasons why a lot of businesses do cash only is for two reasons. One, they're either trying to hide the amount of money they have, so they have less money to report to the IRS, or credit processing companies want to take a percentage of their money. Of course, many businesses, especially small businesses, cannot afford this percentage, so they just don't do it. Of course, when you have a cash-based business, it's a lot more difficult to figure out where this money is coming from. Is it from donations? Is it from your services? And where is this money going? You know, you can say you spent some money here on inventory, make a whole lot of money, but you gotta get rid of it all. So, when you have a cash-based business, you don't really have all this problems. Because it's a lot more difficult for the IRS to track down where your money comes from if you don't have online orders. And that's the beauty of it. Oh, shoot. And that's the beauty of it, really. Because what you're doing is you are hiding how much the IRS is going to see. And when you do that, you pay less in taxes. Of course, this brings out for the other thing, which is money laundering. And of course, if you've seen Breaking Bad, Mr. Saul here will tell you how to launder his money with business.
This is the nail salon, right? I take your dirty money and I slip it into the salon's nice, clean cash flow. That's called layering. Final step, integration. The revenues from the salon go to the owner. That's you. Your filthy drug money has been transformed into nice, clean, taxable income brought to you by a savvy investment in a thriving business.
But of course, the IRS, once again, will look at your books and they will be very curious about how you got your money. So this is a very illegal way of doing this, and I do not speak for anyone, and I am not going to give this as professional advice because I am not going to jail. So, do what you will with this information. I hold no responsibility for anyone's actions, and I am not going to jail. Now, our fifth operation here will be reporting your losses. Yes, as I stated before with this whole cash-based business here, we want to lose money. We want to lose as much money as possible. And that requires reporting our losses. Because the IRS may just want to know how much you make, and they want to know how much your income is. But you know what you could also give them? You can give them your losses. Now we're going to talk about something that's very popular nowadays, the stock market. Stock market go burr. Actually, no. Recently, stock market go not burr. Stock market is dying because banks, and I don't want to talk about that. So, but of course, when you have stock market go burr and stock market go no, what you can do is you can actually capitalize on this. Let's say I put in my stocks in Tesla because Elon Musk said so, and I put my money in, and then all of a sudden I lose all my money because all of my Tesla stock is now worth less, and it's worth pennies. I can figure out how much I originally paid for it here, and then if I can figure out how much I lost from here, I can actually report that on my IRS gains or losses. Because if I make money from stocks, I need to report that so I can be taxed more. But on the inverse, if I lose money, I can actually get more of a break because I lost money, not from business, but from my own means. It was a chance that I took, and I lost. And of course, this also goes into gambling. Because when you're gambling, you're also making bets on whether you win. Now, of course, if you make a certain amount when you gamble, you have to report that to the IRS. But on the inverse, you can also do the same if you lose a lot of money. So, if you got terrible luck, come December, go to the casino and lose a whole lot of money. Just burn it all. Bet on red, and just lose money. Now, of course, if you have the money for this, good luck. I'm only here to tell you how to pay less in taxes, not how to be financially stable. And if you're already a gambling addict, well, you should already report on these. You should report on these, Save some money on your taxes this year. If you're already an addict, make the best of it. I don't see why not. Now, for our sixth one, we are going to be looking at your retirement. Yes, when you turn 65, you're going to want to put your money away, and you're going to want money. Because when you're 65 and you're old and your bones are creaking, you're going to still want money, and you can't work anymore. Probably. I don't know. I have family that's like in their 70s, and they are still fit, and they are strong enough to beat me up. But going besides that, when you're 65 and you're retired, you're not going to want to work. And that's fine. So, what do we do? Well, like I said before, there's always the stock market. Stock market goes up, stock market goes down. But you got to pay on these taxes, and taxes are no good. So what do? We put it into a non-taxable stock. I believe the proper term is an IRA. Why an IRA? Because IRAs are non-taxable. The government will not touch this because you are not going to touch this until you're 65. And that's a good thing, okay? Because when you have money, You just shove it into this IRA, and government can't touch it. You can't touch it. And nobody can touch it. But you're gonna win later, because that money is gonna go up. It's gonna go up like the stock market. It's probably not gonna go down. Hopefully, I wouldn't bank on this at all for your, especially for your taxes. But it is a very good solution, and it's actually very helpful. Kind of like, unlike gambling here, where you're just losing money every time you lose. You're reporting on it, so you're paying less in taxes, but you're still losing money. With this, your money is not being touched, not by you, not by the government, and you're still going to get that money back. However, you're giving this money to the government. So, what does that mean? What does it mean? It means we all lose, and the government wins. I don't know what to say about that. Now, for number 7, it's a fairly easy process. Have children. Yes, have children. Because when you have children, you have less dependents.
Oh my God!
Scratch that. You have more dependents. And because let's be honest, children are expensive. You gotta clothe them. You gotta feed them. You gotta send them to school. You gotta take care of them. You gotta spend time on them. It's a lot, all right? But having children means you file that on your taxes. Means you get a tax credit, and that brings down your taxable income. Especially if you have no kids, the IRS will come for you because they're gonna see that you make a lot of money, and you're not spending that money on anything meaningful like children. If you spend it on a sports car, they're gonna take more money from you. So that's definitely one sure way. It's like takes 18 years though to bear fruit, and then you put them an extra 4 years probably through college, so that's more money down the drain. But you're paying less in taxes, and that's all I'm here to do. Tell you how to do it. Now number 8, having interest. Now everyone knows what a mortgage is, all right? It's giving money to the bank and then paying off that mortgage for the next 30 years. But of course, when the mortgage comes, the bank makes their money by interest. Of course, there's interest. Now, you can report this interest to the IRS, and the IRS will not factor in your interest as a part of your taxes. So when you pay interest, you're paying a little less. It kind of helps. And especially if you already have a mortgage, it's very nice. Especially trying to figure out everything else. You know, it's a little break. It's not something like doing a cash-based business where you're putting in and taking out money at your leisure. But of course, one of these factors is legal, the other is illegal. One is more profitable, the other is not. So, I give you the decision. Now for number 9, this is actually a pretty simple one, and it's very legal. You just give your money away. Give it away. Give your money away. Give it to charity. You know, you have a cause you believe in, give it to charity. Just give it away. You know, put that in on your tax forms, and the IRS will just waive a lot of your money. You know, give a lot of money away, they won't tax you for it. It's not taxable. So just give your money away. In fact, if you want to give your money away, give your money to me. Give your money to me. Okay? You will be less taxed, and you will know that you will be less taxed when you give your money to me. Just make sure to list it as a donation, because then I don't get taxed. It's that simple, really. Now, number 10. You just pay an accountant to do everything I just told you to do. Alright? This T-chart business right here, this is what accountants love, okay? They love this T-chart because it's balanced, okay? And when they look at this, they're going to see, oh, he makes money. He makes money. Lots of money. So, how do we get rid of that? We got to balance this out. So what do? We put this money in his liabilities, okay? He's got children. He's got a mortgage. He's got all this money. And you know what? That's the real lesson for today. Because with all this talk about your taxes, we do this on our own. Or we pay someone to do it for us. And that's the kicker. Because, at least in the United States, we gotta pay someone to do it. when you look at places like Australia and other European countries, they just send you the bill. Their government will just send you the bill, and then you pay or you don't pay for what the amount you owe. That's a little different here in the United States. And you want to know why? It's because you got companies like H&R Block and TurboTax who don't really want that. Because the government already knows how much you owe. And if you don't pay them the right amount, you go to jail. So, what do we do about that? They could just send you the bill, but no. Because they want you to spend more money on accountants to do all this. To crunch the numbers and give you a certain amount, saying they're helping you while you're giving them money, and while they tell you how much you owe, and they do all the little things like your medical expenses, your mortgage interests, and they do all the loopholes to find you the least amount of money to pay. And that's the real irony here. So, that'll be that. I mean, I just given you methods to pay less taxes. Because you know what? Tax season's coming up. And we gotta figure out how to pay the least amount of taxes as possible. Of course, you probably already filed your taxes, ain't you? I wouldn't be surprised if you did. You just don't make enough money. Just don't make money. Told you, like, the first option, just don't make money. Make under the amount, I believe the amount is like $12,000 a year. Just don't make that amount of money. Just make under $12,000 a year. Simple, really. So yeah.
You're not managing accounts anywhere else, are you?
Right now? Nope. I'm a cashier at a car wash.